Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a great long weekend so far. Now keep in mind, in today's video, all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. Now, why do I use the wheel strategy for most of my capital in my trading account? For 3 very simple reasons, guys. Number 1, it's a very easy strategy to learn, manage, and then it is also scalable too. Whether you have a $10,000, $20,000, $30, $40, $50, or even $1 million accounts, it's a strategy that you can scale up or down depending on your account size. The number 2 reason that I love this strategy, it's very passive. It requires very low time management, which means that if you have a full-time job, if you're traveling, if you're doing a bunch of stuff and just don't have time to spend 8 hours in front of the charts every day and only maybe have 15, 20 minutes every day, this strategy might be a very good fit for you. And now, number 3 reason why I love this strategy is because it has a very high win rate. It's very consistent, it's great for confidence building, and the ROI is quite decent as well. But it's a very high win rate strategy, which does lead to good trading habits and great consistency overall. So in today's video, guys, I got a few things to present to you guys. Number 1, as per usual, we will go over the expectations for the week. Where do we stand in terms of our technicals on the charts? Where do we also stand in terms of possible macro news events to look out for? And also maybe earnings and other things to look out for overall, just coming outside of the charts. That'll be section number 1. Section number 2, I will very briefly go over the rules of the strategy that we're going to seek to follow, because as with usual, if you want to have the best performance with any strategy, there has to be some rules and we have to respect them. So I'll be spending a couple minutes on that section. And number 3, guys, is going to be the top 5 options plays of the week, but we're going to do something a little bit different this week. Because of the amount of comments that I always get when I do these videos of how to play momentum stocks, stocks that have very high volatility, stocks like Palantir, stocks like HIMS, stocks like Circle, stocks like CoreWeave, and maybe other stocks such as the nuclear reactor stocks, the quantum stocks. If you guys want to play the wheel strategy on momentum plays, what is the best and safest way to do it? Meaning that we don't want to get trapped near the highs of some of the moves, but we possibly want to play the pullbacks with a decent degree of safety. Today's video, we're going to be doing momentum stocks that we can play for the wheel, but although in a somewhat conservative strategy in line with the wheel trades strategies overall. So it should be a very much more fun video possibly than usual. And just to give you guys a bit of a, historical glimpse into what we've been doing here pretty much for the past year. I've never made a video on how to trade these momentum stocks with the wheel strategy. There is a way, and you guys see me do it with my account every week, but I've never actually shown you guys the steps that I take. And just to show you guys the type of stocks that we've been trading here in the past, 2-3 months that I've had this list, here's all the top 5 options plays from previous weeks, and you'll see some common themes, right? Google, Apple, DEC, AMD, the week before, Google, Amazon, Apple, the weeks before. I'll just scroll up. Look, these are all the top 5 plays that we had been playing pretty much through June, through May, all the way back through April as well. So you could notice a common theme here. We used to be playing a lot of the big tech names. However, in this market environment, guys, the big tech names have been running away. They are no longer close to relevant support areas. Even now, Google is breaking away from its own respective support area, and other stocks alike. We were able to play Apple for a very long time, but now everything is kind of running to the upside. Even a name like Shopify that we were enjoying playing the lower 100s, they are rallying to the upside. And the number 1 thing that I always tell you guys to do with the wheel strategy is do not chase the market, right? The last thing you want to do is start riding super close, and then the market has a pullback and you're underwater. You have no more buying power for other stocks during that dip, because then you're trapped up here. The wheel is a defensive premium farming strategy, guys. It is not a strategy for offense. If you're looking to carry moves to the upside and benefit from upside rallies in stocks, the wheel is not the correct tool, right? The wheel strategy is once again for premium farming. If you want to maximize upside gains, you have to complement the account with either leaps, call options, and potentially debit spreads alike, which is something that you do see me do as well on the trading account. When I go through my positions every Monday and every Friday, you'll notice that I have a ton of long directional plays as well. So I have a portion of my account that's reserved for playing the wheel, but then I also have a portion of the account that is for long specific trades, because when I'm buying these dips, I don't want to play the upside, guys. I don't want to chase with the wheel because shares is the least capital efficient strategy. I want to have built positions in our support levels and then follow the markets to the upside while I'm already in positions, right? And not chase it with the wheel. So that being said, guys, that's a very quick introduction. We'll get into some of these momentum plays shortly. But first off, what we have to take a look at is the news catalyst for the week and also the technical analysis of many charts. So in terms of what we have to look out for this week, guys, well, there's a few key things that I want you guys to realize. We're at the all-time highs right now. We've had very nice 5, 6, 7, 8 upside sessions in a row. The fear and greed index is now curling into extreme greed. We know momentum is good, but here's a few things to look out over the course of the week. Number one is going to be the expiry date, of course, which is July the 9th, the expiry of the 90-day tariff pause. Now, we did have Scott Bessent commenting on a few things over the course of today, Sunday. Nations chase U.S. trade deals as Bessent hints at longer deadline. Not only Bessent has hinted at this, but President Trump has hinted at this as well, to where there is going to be an extension. If countries are not able to meet the negotiation requirements, they will have until August the 1st. And the major players that we're going to keep an eye on over the next 3-4 weeks are going to be the following: the largest trading partners: Mexico, Canada, China, although there's a framework with China right now, no official deal has been signed. Germany, Japan, Switzerland, Ireland, Taiwan, South Korea, Vietnam is one that we have officially got a deal with over the past week, as you guys saw with the headlines, but everybody else, it's time to come to the table and negotiate and finalize those deals. Major U.S. trading partners hurried over the weekend to secure trade deals or lobby for extra time. What Treasury Secretary Scott Bessent indicated that some countries lacking agreement by the deadline Wednesday will have the option of a 3-week extension to negotiate. Essentially, last call. The levies will kick in August 1st, so there's still time for those that aren't close to an agreement to bring offers to the table. What happens if there's no agreement by August 1st? Good question. They get the exact same rates that were stipulated back in April on Liberation Day. So this is something that we're going to pay attention closely over the course of this upcoming week. In terms of the macro, we really don't have much, guys, right? We only have the FOMC minutes, which is just a recap, nothing. Look, there's no news whatsoever this week. So this week, the markets could indeed drift higher overall. We also know that seasonality is definitely in our favor right now. July is one of the best months in the market. This is a 20-year average of S&P 500 seasonality. July is the second best month in the markets, essentially in terms of seasonality. So it could be green. We're off to a good start. This statistic right here as well, July has been one of the strongest months for the S&P 500 over the past decade. Positive 10 out of 10 past years. Look at the column for the month of July. The average return is 3.35%. Couple that with the fact that we don't also have any earnings to speak of this week, other than a few, B, C grade companies overall, some, one airline, but overall nothing, right? So when you have a week where you have no economic headlines, you have no earnings, you have positive seasonality, even though we have ran, the markets can run a little bit more. Even if we get short-term pullbacks here, they most likely will be buy the dip opportunities, which brings us into the technical portion, right? If we get an early morning dip Monday or Tuesday, it's pretty much going to be last chance to dance, in my opinion, to lock in some of the levels below. So we will pay attention if on Monday or Tuesday we can get some short-term dips in the market, because we know any move lower just going to be looking for a higher low, right? Anything above 593, looking for a higher low, for a possible further trend continuation, as the bulls are in control on the SPY of the daily charts. They're in control of the weekly charts. The monthlies, as we saw last week when I covered the candle closes, are looking very good for the engulfing move into expansion. So the bulls control the short-term timeframes, they control the longer-term and medium-term timeframes as well, and momentum is still good, aka July could be a decent month where if you do find some early volatility early on in the week, it could be attractive to sell some put options below some of the key levels. This is just the index, but there are other key levels on some stocks too. So that's pretty much it for your preview of the week. Essentially, I do believe that everything, when it does drop, and if it does drop, is a great chance to put on some short put orders essentially and benefit from that drawdown, benefit from that volatility, especially as we know seasonality is in our favor right now, and we possibly have another 3 or 4 weeks until we might run into some major other tariff headlines as the negotiations are still underway. With that being said, guys, let's jump into some of the strategy rules right now. And these rules, although today's plays will be momentum specific, the rules still stand, guys, because although I'll give you a momentum list, right? You still have to be on the watch for all the other traditional companies that we usually play. Some of the big tech companies and otherwise. They've ran a lot, but if they have a couple nice days of pullback, they will be back on the watch list essentially, right? So here are the rules. Now, I'll leave a link to a 10-minute video down below in the description where I go through each and every one of these rules in detail. Just to save on time in future videos, I'll be just skipping over the rules and just telling you guys to take a screenshot or to refer to the video down below. But the one thing that everybody should be doing, guys, is build yourself a watch list. How I can always find these options plays no matter what day of the week is I have an options watch list here with almost 200 companies on it, and I filter by red. That's what tells me where the opportunities are every single morning, so I don't have to manually look through every single stock in the market. Trust me, it saves a lot of time. But for all the other rules, refer to the video down below. It's only 10 minutes. I go over every single line in detail, and you definitely need to be respecting all of these rules if you want to have the best success with the strategy overall. So with that being said, guys, now let's jump into the top 5 options plays, which are going to be a twist this week. They're all going to be momentum stocks. Now, just as a preface to the word momentum, guys, momentum does not mean we have to have FOMO. I'll use Robinhood as an example, right? Momentum does not equal that we FOMO at every single price, start selling put options super close to the market because we have FOMO and we want to catch these absolute rallies and we think the stock is going to move on forever. No, I want you guys to equate momentum to high implied volatility. When stocks have a lot of momentum like this, they have a lot of what we call implied volatility. When you have higher implied volatility, it means that the degree to where you can write options or the distance at which you can write options becomes a lot wider. If you take a look at a company like Pepsi, Pepsi has very low momentum, very low implied volatility. The volatility on this stock is very low. So on a stock like Pepsi and a lot of other value and defensive names, sadly, we have to write very close to the market to get any meaningful premium. I'll show you what I mean, right? So if we take a look at Pepsi options right here, even though Pepsi has rallied in the last 3 days, and you can argue that they have a bit more momentum than usually, take a look at these premiums right here. If we're looking for the 0.5% rule, we have to be at 133. 133, guys, is literally only $2 away from the market. It's not that far, right? And it's literally only a 1.5% decline. That is nothing. But if you take a look at a stock like Robinhood, let's say, that's had several weeks of momentum, several weeks of positive bullishness, their implied volatility is 63%, which means that you can get some good distance when we're looking for some strikes. 83 to be exact. So the stock right now is at 94. We can get the 83 strike. Robinhood is not in the top 5. I'm just using it as an example. We have to couple this with support as well, which goes into the rules that you guys should be familiar with right now. But you see this? That's good distance. That's 11% away in 5 trading days. Now we have to couple this with a few rules as well, such as going for different support levels, which is why Robinhood is a nice momentum stock with a lot of implied volatility, but I am still not playing it because there is no support levels down here to be basing our trades off of to be sure that if the bulls pull back into somewhere, there's heavy areas of support, something like this, to where we can possibly get some very nice bounces, right? There's just nothing that has been established on this entire way higher. So the top 5 options plays I'm about to present to you, they do have levels of support below, and that's why I've highlighted these ones. So option number 1, play number 1 is going to be AMD. So AMD, a lot of momentum as of recently, guys. Very decent implied volatility on this one. And we're coming back down into a level of support. 132 down to 120. Put this one on the weekly time frame, and you'll see it's a very important level. The bulls struggle with this area for a long time. It was support. It was resistance. So it is a very key level. You also have tons of moving averages down there as well. We also know the bulls are in short and medium term control of this chart. This is the weekly chart looking for a higher low pullback area to possibly continue the trend. So I do want to be playing this pullback on AMD, but not just anywhere. I want to make sure that I'm getting the best possible distance as low as possible to minimize my chances of being assigned. And if I am assigned, at least I'm sure that I'm getting deep into the support range overall, or at least as deep as I possibly can. The valuation of AMD, even right now at the 140 range, is still all over quite cheap. So I would not mind being assigned the stock on that pullback because the valuation is somewhat cheap. Now, in terms of the expected move for the week, the expected move is 133.01. If you don't know where to find the expected move, just go to this website right here, barchart.com. Type it into Google, bar chart, expected move, AMD, or whatever stock you want to look for, you'll come to this page right here. You'll want to pay attention to the week ending expected move, the lower price, because we want to be below the lower price. Because if we're always writing below the expected move, we once again put more odds in our favor of not being assigned. So this week for this momentum stock on AMD, the expected move is 133. Let's see how far below 133 can we actually get. You can see if we're going for the 0.5% rule, 0.5% rule will be right here. Half of 130 is roughly 65. You'd be getting about 0.5% at the 131, which is below the expected move. Now, 131 in terms of distance is not too bad. It's about 5% away from the current market. However, if we get a red day start off the week on Monday, or maybe we review if maybe Monday is flat and then Tuesday drops, pay attention, guys. You want to be below here, yeah? You want to be deeper into the 130 to 125 range. So although right now the 131 is presenting an okay opportunity, if we have a red day, if AMD drops 1.5%, 2.5% on Monday, then it's going to free up the strikes that I actually want. I want anything below 130, between 130 and 125, as low as we can possibly go while still getting paid our ROI. You should once again be looking for 0.5%. That is stock number one. Stock number two is going to be CoreWeave. So CoreWeave is another momentum name overall, right? Take a look at CoreWeave right here. Clearly see a lot of momentum, and the stock is not trading at ridiculous valuations just yet. The market cap is about 80 billion. They don't have any EPS for us to go off of, so we can use something like price to sales. And if we go through their 2027 and 2028 sales, let's do an average here of about $18 billion. That's not so bad for a tech company overall. If you were to divide their market cap 80 by 18, that's roughly a 4.5 price to sales. Manageable, right? Notice I use the term manageable. It's not extremely rich, but it's also not cheap. The valuation is still manageable. However, what I want to do is play dips with a good distance. Now, I already have an option on CoreWeave that I was able to get early on Friday morning. However, if this one has a bit more declines into the Monday session, let's say they come back for a little bit of a retest of this support range right here, which is 160 down to 145, maybe you guys can find some of the same strikes as me. I'll show you guys the strike that I got. The strike that I got on CoreWeave is 125. This is what I mean when I want you guys to go for good distance. This is how we play momentum stocks. We want to play them with as much distance as possible. Now, if you are very aggressive and you absolutely want to play CoreWeave up here, that's up to you. But the way that I play these momentum stocks with the safest way possible is I try to make sure that I get the maximum amount of distance into a next area of support below the current one. I want to get the maximum amount of distance as possible. You can see here that I got the 125 short put on on Thursday morning before the markets closed for 70 cents. That was literally 0.5% for the upcoming week. Take a look at the implied volatility on this CoreWeave option right here, and you will see that it's absolutely fantastic. So any red days on CoreWeave, pay attention. Maybe you guys can also get some very deep strikes. 83% implied volatility. The expected move for the week is 150.67. So obviously, we can look a little bit below the expected move, and you guys might get seduced by the premium. You look here at 149, 148 and say, wow, there's over $3 in premium there, guys. It's a trap, right? Sometimes it can work, but sometimes you'll be surprised and you might be assigned. This is insane ROI. We do not have to go for this. Some people that are more aggressive will want to go for this, but in my opinion, there is somewhat what we call a middle ground, right? We don't have to be too aggressive if we don't want to, because there's so much implied volatility on this stock. We can play some of the lower levels. Take a look here at the 130. The 130, you might not be able to get as low as I got this week at the 125, but if we're looking for the 0.5% rule, you can see that you can find it here at 128. You could probably get 60, 65 cents here for this contract, or maybe the 130s. You can also find 0.5%. So that, in all reality, guys, is a long way down for 5 days of trading. This is for people who like CoreWeave stock. If you don't like this stock, then by all means, don't play it. But I'm here to kind of do this video for everybody that's asked me to cover these momentum stocks and to give my ideas and insights as to how I enjoy play them. You guys see me play them, but I play them very conservatively. That's just my choice. I want to be safe, guys, because I make sure that if I do get assigned down here, most likely if I do get assigned on such a steep drop in one single week, well, we're going to be short-term oversold. We'll be short-term oversold on the 4 hour. We'll probably be short-term oversold on the 1 hour. That's like a 20% drop on the stock in a week. So I do want to not mind being assigned down there, but I want to keep myself to some good distance. So for CoreWeave for me this week, even though the expected move is at 150, and even though some people could argue, yeah, well, can't we just play the bottom of support? You can if you want to, but I would rather be safe, a lot more safe, and just collect my average ROI. You guys might think it's too conservative. Feel free to do what you want, but I'm just trying to provide a good middle ground here. So for me this week, it's going to be between 130 and 125, but you may need to wait for a bit of a dip, guys. If CoreWeave has an 8% pop on the Monday session, well, we're not going to start chasing the stock, right? No, the premise of this strategy is we want to be playing defensive. We want to be waiting for red days and then right very well below the market. So that is stock number 2. Stock number 3, another momentum one. This is going to be Circle. The reason I tell you guys to be careful with these names is because if you get too greedy when it's all the way up here and you think it can only go up, such as Robinhood is doing right now, it can never pull back. Well, then you get hit with a 5-day pullback of 35%. Now, I'm not saying this is going to happen to every single stock, but it's just to let you guys know that it can happen. So the last thing I want for you guys is to get seduced by massive premium. When the stock is up here, you right there, then you get trapped, and then it's not a very fun time for a while, right? This happened to a ton of people on MSTR. It happens to people all the time, right? So I do not want it to happen to you. Be patient and wait for the pullbacks. You guys have seen me play Circle every single week on this pullback for the past 2 weeks, and not one time did I ever get assigned. Why? Because I've been playing so low that I put all the odds in my favor of just not being assigned because the drop that it needs is way too low, right? That being said, the next areas of support for Circle stock, there's not very much because it's a brand new ticker, right? The next one is down here, 160 to 145. Still a little bit close. If you ask me where my favorite levels are, it's like 130 down to 120, guys. I know you might think, well, it's very cheap. It's never going to get down there. That's the point. If I can collect 0.5% in ROI while giving myself some fantastic distance, then it means the probability of my trade to be a win is a lot higher, right? So let's take a look at Circle stock right now. There's a way that I play these momentum stocks. As I've said, if you guys want to play them closer and take your chances and go for the massive amounts of premium, that's on you, right? If you get assigned and then you message me or comment down below, what do? I got assigned at a high price and now I'm down 20% in 2 days. I mean, the wording is there for a reason, guys, right? The momentum stocks, you can play them, but you have to play them smart, right? So let's take a look at Circle. The expected move right now is 171.69. Let's take a look at support level number 1. We want to be at the bottom end of it, which would be 140. Let's take a look at the 140 area. 87% implied volatility. Around the 140 area, there's not much at 140, but if you step it up to, let's just say, 150 right here, the premium is getting there. All reality, Circle used to have a lot better volatility in the last few days of last week, and now the volatility has slightly declined. You can see here the implied volatility chart, right? Midpoint of June, when I was playing this one a lot, into the last 2 weeks, the volatility was over 100. Now it has gotten cut in half, which is why you can't get the same amount of distance on the strikes. However, if Circle has a big red day, which is no stranger to Circle, you guys can see this one dip any day, 6, 7, 8% right out of the open. And when that happens, I am always playing it. The implied volatility will expand. You'll be able to get lower strikes on the premium. So for me this week, guys, I want 140 or less, but as of right now, there is not much there. Essentially what we need Monday or Tuesday is a quick and sharp decline, 6, 7, 8%, and then you probably will be able to find some very decent premiums here on the 140 strikes or possibly lower. I've been playing 140 or lower on Circle this entire time. Every time there's a big red day, I write all the way down there and I put most of all the odds of not being assigned in my favor. To be assigned on Circle at 140 or lower, by the end of the week, the stock would need to drop 26% in the given week. So keep that in mind. That is stock number 3. And now moving into stock number 4. Stock number 4 is going to be one that I haven't seen a lot. Well, I haven't done on the channel a lot, guys. It's going to be Palantir. And yes, I know I'm the first person to constantly talk about the valuation. I am a Palantir shareholder myself, but the valuation on this one is crazy. But another thing that's very good on this stock, it has a lot of implied volatility, which means that when we have big pullback days, we can usually find some very good strikes below the market. Keep in mind with all of these momentum stocks, guys, I highly recommend, not financial advice, but to play them with a smaller percentage of your portfolio, because we know that sometimes the valuation on these and the pullbacks can be quite violent, especially when valuations are high. If the SPY and QQQ go into 2, 3, 4 days of consolidation and the indexes drop 2, 3, 4%, what do you think happens to names like Palantir? They usually drop 10, 15%, which is why we need to play them with some good distance. That being said, support for Palantir down here is 125 to 120. The valuation is sky high, so keep that in mind. We have to play this one in a risk-averse fashion, right? If you want to play upside, there are many ways to play Palantir in a much cheaper fashion than with 100 shares, right? Think of leaps. Think of call debit spreads to play some upside. But if we see some nice red days on Palantir, maybe we could find some levels below support overall, which could bring the stock down from the highs over 20%, which is usually when Palantir starts to find a little bit of a bid. So the expected move for the week for Palantir is 128.39, but you guys know me. I don't want to be around the expected move. I want to be well below. Let's take a look at Palantir's options chain right here, and I'll show you if I wanted to, and if I, well, not if I had to, because, you know, nobody's forcing me to play Palantir, right? But if I had to play this one, the implied volatility on Palantir is not what it once was. Take a look at this volatility chart right here. Normally, Palantir trades at a 60, 70, 80% IV. That has been cut in half. And a lot of these, the reasons that a lot of these stocks has dropped is because the VIX has been very low, right? So pay attention, guys. We want to be waiting for big red days. You do not want to play these on green or flat days because any spikes in the volatility, and you would have been very happy that you did wait indeed. That being said, keep it on the radar. I've been eyeing Palantir for the last few days, just waiting for the next red day to possibly write some options. You can see down here, the 0.5% rule comes into play at 124, which is currently a 12 delta. Probability of being assigned is not that high, but 124 is at the shallow end of the top end of the support range. If Palantir drops 2, 3, 4%, and we can't say it can't happen, guys. It's been happening a few times, right? And then we might just be looking into a daily downtrend right now. If you get some follow through to the downside and you see Palantir drop 3, 4%, watch the options chain. If you ask me where I want to be playing Palantir, I would love to play it under 120, preferably towards 115. So keep those strikes in mind. That is a good distance for Palantir on the week from the start of the week to those strikes, right? If we were able to find a 3% decline on Monday or something like that, from there to the 115 strike, that will be 14% decline on Palantir throughout the week overall, and they still have to get through this big area of support first. So you're putting all the odds in your favor. You have a big support area that's between you and assignment, and you're playing good distance on the stock overall. That is stock number 4. I'm not saying that I will play it this week, but it's just something for you guys to keep in mind. These momentum plays, this whole momentum strategy, guys, you can apply it into future weeks. You can apply it to anything. You can apply it to, you know, these other stocks like SMR, right? SMR, just find a support area, wait for big red days, and try to find deep, deep, deep down there as possible. You can apply this to Oklo. You can apply this to Rocket Lab. I'm not saying play them, right? I'm just saying, can we please stop playing them here and wait for the red days and start playing them into support levels? You know, to a certain extent, you can play them on the quantum computing stocks, on big red declines, weekly declines, stuff like that. Target next areas of support, and maybe you find some plays. The EV stocks like ACHR, stuff like that, right? We're coming into a nice support area. We want to be riding as deep as possible below support overall. So I'm not saying not to play them, but there is a way to play them, and we should be playing them in a risk-averse manner, and we should be playing them with a small percentage of the account overall. But anyways, I digress. Let's move into stock number 5, and it's another momentum name, which is HIMS. So of course we know that HIMS had a 35% drop after the NVO news, and they've established some form of a baseline of support down here. However, we also recognize that the larger area of support might be a bit lower. 37, the 200-day EMA, all the way down to the mid-30s is a beautiful area. That being said, if HIMS rolls over, as it currently has been recently, right, if we get some more red declines, possibly, as I found in the past 2 weeks, we might be able to find some strikes under 40 bucks. Think 38, 37 into the mid 30s. Get as deep as humanly possible. That way, if you are assigned and you do enjoy HIMS, at least you're probably getting assigned at the best possible price, and the short-term timeframes will likely be oversold. If it's straight lines down into there, look what happens. You get oversold timeframes, and usually if you couple that with some support ranges, you can probably find a bit of a bounce, which means that even if you do get stuck, assign some shares, maybe it wouldn't be for that long because the bounce is probably coming overall. That being said, the expected move on HIMS for the week is 44.46. We have a nice area below where the bulls stop the bleeding, which is 42. So they have to get through 42. If you want to see some further declines, number one, they got to get through 42, and you know, that would be some good distance. If we're targeting below 40 here, look at the distance they have to cover in 1 week. It's almost 20%, right? So let's have a look at HIMS right here and try to find below the expected move, preferably way below the expected move of 44, preferably below 40. You might think it's not possible. As a matter of fact, it is possible. The IV rank of HIMS right now is 74. So let's have a look on the options chain right here. Where can we possibly find? We'll take a look. 0.5%, half of 40 would be 20. Well, voila, here you go. You have 20 cents on the $40 bid. Some people will want to play this one very close, around the expected move. You're getting over 1%. You might be seduced by the premium. That is up to you, but I would rather be safe than short-term sorry, let's just call it that way, right? I'll be playing 40. However, if HIMS has another decline into the Monday session, which is why I build the watch list and I see if it's coming on the watch list, is it big red? If it's big red, early morning volatility, I will probably play it. That being said, if we have a 3-4% decline on HIMS, well, what do you think is going to happen? The premium right there on the 40s is probably going to move down 38, maybe even 37. So I would rather play the high to mid 35 range, right? Instead of just playing this $40 range set in stone. If HIMS drops 3-4%, I'm not going to play 40, guys, right? Even though the premium's going to be higher. I'll try to get as low as possible while still getting 0.5%. I want the maximum amount of distance between the current stock price and my potential assignment strike price, the price that I'm writing these options at, right? And I still want to be getting 0.5%. So with those top 5 options plays, hopefully I've provided you some good education as to how we can play many different momentum stocks while still looking at support areas, while still getting some good distance, and while also not having FOMO by trying to write too close because we want to collect a bunch of premium in the event the stock rallies higher, right? Don't do that, guys. The wheel is not the right strategy to get seduced by high premium, right super close to the market because we think the stock is going to do this. If you think the stock is going to do this, why are we putting up $4,500 of capital to take that bet with the market? If we're wrong, we're in it for $4,500. Sure, we'll collect a couple $100 in premium, guys. But what if the stock just goes down and then stays down here for a while, right? You're going to be trapped with $4,500 that you cannot use in other situations. Sure, we can write covered calls against them, which is what I teach you guys, but still, the point I'm trying to make here is if your view is that HIMS is going to pop in a big fashion, well, try to make the best of your capital efficiency. Try to find a bullish directional option strategy that costs a fraction of what it would to allocate 100 shares into this position. Think leaps in terms of leap call contracts, putting a lot of time on it because in the event you're wrong, at least you have a long-term time horizon in which the stock can recover. Or if you think it's going to happen short term and you want to say, well, you know what? I'll take a bet on this one in the short term. If it fails, it fails. Then you should be looking at shorter term call debit spreads, a defined risk strategy. You risk $200-300, you're going for upside. And if you're wrong, at least you lose $200-300 and you're not trapped with $4,500 per contract. The goal of options trading, guys, is always to be the most capital efficient as possible so you can rotate many plays frequently and keep your capital moving and not being stuck in plays longer than you need to be overall. So hopefully that was educational. Now, of course, as per usual, I have 10 bonus plays for you. So thanks so much for sticking around to the end for this section. So let's get into the bonus plays, shall we? The bonus plays, usually what I say is the bonus plays, it's not as if they're not as high quality as the top 5, but this week, the top 5, some could argue they're quality companies. Some could argue that they're just hype and momentum names. Anyways, the 10 bonus plays essentially are stocks that are just not quite ready yet. They're on my watch list and I'm watching them for a pullback to play the wheel on them, but they just might not be quite ready just yet. So let's dive into them right away. And we're going to divide this section into 4 different parts. Number 1 is going to be other growth stocks that I'm paying close attention to this week. Number 2 is going to be value stocks that I'm paying attention. Number 3, small account stocks. And number 4, big account stocks. So with that being said, let's start off with section number 1. It's going to be the growth section. And I'm going to be looking at BITX. I've had some good success with this one in the past, and we're going to be looking to replicate this success into this week. Now, I already have an option on BITX, and I'll show you. I'm playing the $48 strike. I got 28 cents, which is 0.5%, right? So the same rules apply. I want to be playing the lower bound of recent support, which right now is about 50 to about 48 bucks. If we pull up the Bitcoin chart, where would that be? That would be the lower $100,000 range on Bitcoin. And if I actually pull up my proper Bitcoin chart, you will notice that that is the most recent area of very large support. Prior resistance all-time highs, current support all-time highs. They've been holding this range, guys, very tight for the better part of the last 2 months overall. I want to be playing the bottom end of this. If you don't like Bitcoin, then by all means, do not take this trade. But I'll be looking to play the 2 times leverage version of Bitcoin, BITX, the ETF, in the high 40s. I mean, I already have the contract, right? But just to give you guys an idea, this is where I'm writing. If you get a big decline, maybe you get a better strike than me. Maybe you guys can find the mid to low 40s, and that would be even better because that would be equivalent to Bitcoin in the lower $90,000 range. Second one that we're going to play is SOXL. Now, I've been playing SOXL almost every single week, but not at any point in time. I wait for pullbacks. When I see pullbacks, I target the most recent areas of support. That being said, if we get a pullback on semiconductors this week, I'll be targeting on SOXL 21 down to $20, the most recent areas of support. We're coming into resistance right now. The bulls are in control, but we know when we get pullbacks, they happen sharp and they happen very quickly. So as a result, I don't want to be playing SOXL here. If you guys want to do that, it's up to you. I'll wait for my red days and I'll try to write well below the market at a price that I would not mind being assigned. So keep that in mind. By the way, for all these top 10 options plays, right? Or rather the 10 bonus plays, I won't be giving you guys the expected moves. You guys can now find those on your own. I'll just be telling you guys where the levels that I want to play these things on pullbacks might just come. Number 3 as part of the growth category is going to be Shopify. Shopify has rallied into the highs that it's been in the last 4 or 5 weeks of trading. So do I want to chase it here just because I think it's going to go higher? No, that's not the proper strategy for this stock, right? If you want to play Shopify, we have to wait for a red day. Then we have to be targeting the lower bound of support, which is 105 down to about 100. So Shopify is on my list. And trust me, when we get these big red days, I play Shopify. As of right now, there hasn't been a big red day in the last 4 trading days. If we get 1 or 2 big red days of a decline, I will gladly try to go shopping for Shopify stock 105 down to 100, trying to play the shallow end of the start of this support range overall. Still one of my favorite growth stocks into the next 2 years. And the last one is going to be Google. So Google, you might remember this one. It was on our top 5 options list for literally like 3 months, right? When it was down here, we were playing this level, right? When it was coming up here, I was telling you guys, no, we're going to wait for a pullback until it comes down to this level. And it was coming to us every single week almost. There were many opportunities to be writing down here. Then we reclaimed the resistance, which then became support. And I was telling you guys, when we get pullbacks, it's decent to play Google in these lower bound range of support, which is what I've been doing for the past 3-4 weeks if you've been following my channel. Now, Google has now broken higher and we're moving into resistance. So do we want to play Google super close just because it's rallying now? No, what we want to be doing is waiting for Google again to pull back. And if, you know, Google is synonymous with pullbacks. They happen all the time. Just wait for the next lawsuit headlines. You'll end up with another 2-3% day to the downside, right? If we get that sometime this week and Google makes its way back down somehow to 175, 174, once again, I'll be playing the 172 to 170. I want to get close as possible to this support range to make sure that when we come down into it, most likely the bulls will react and we'll get a nice bounce even coming into the EMAs. So those are the top 4 growth stocks that I'll be looking for this week. Now, the value stocks I'll be looking for this week. Number 1 is going to be Decker's Outdoor Brands. Been talking about this company now for a few weeks in a row for 2 very key reasons. Number 1, their fundamentals are very good. Free cash flow yield is very good. The valuation is somewhat cheap right now. And we're also coming down into a nice area of support, which is the highs of the 2023 market. We're now coming down into it as support once again. The levels that I want to play on this one are under 100. $98 down to $90. So if in the event you see Decker's Outdoor Brands get some red days, which do occur as we've seen in the last couple of weeks, it's a nice opportunity if you enjoy playing this stock to be under $100. The fundamentals of this company, guys, are very good. It's just that on their last earnings call, they mentioned tariff costs similar to many other apparel brands, but their EPS over the next 4 years is rising. Their revenue over the next 4 years is rising. Their margins are good, and their brands have been doing very well. It's not for everyone, but in the event it's for you, I'm just here to say this is the lower range that I'll be playing it. Another value stock that I'll be looking at again is Pepsi. Pepsi was a play for the last 2-3 months in this lower area. We've been targeting the whole 133 down to 127, trying to get as low as possible. Many people had a lot of success playing Pepsi down there. We are finally getting the weekly uptrend breakout, but as we know, with all breakouts may just come a retest. In the event you still want to play Pepsi at these lower levels, you may have a chance coming up in the next few days. If we get the infamous retest, take a look at the lower 130 range. That is an area that I would not mind playing Pepsi on a overall pullback. So keep that in mind. Now, that's everything for the value plays. Small account plays. There's two stocks that I want you guys to kind of take a look at if you have somewhat of a smaller account. Number one is going to be Rocket Mortgage. Rocket Mortgage, I also have a position on this because when Rocket Mortgage has 2-3% declines, and it has them more often than not, you can play these swings on the stock. You will usually find me selling some options against it. Rocket Mortgage, I have this week's $13 put. I got 10 cents for it, which was about 0.75%. It meets my weekly ROI minimums. That being said, $13 is right there. This is the area that I like. So if Rocket Mortgage has a decline at the $13 or down into the 13s again, I will gladly play this level again. Now, if I only had the capacity to maybe play 2 contracts, because I know the actual bigger support level is down here starting at 12, as we can clearly see from this chart, 13 is like an intermediary level, right? There are some short-term support levels down there, but this is the big one, right? If I only had the buying power to play 2 contracts ever on Rocket Mortgage, maybe I would play 1 here, right? And then the event I get assigned and the stock moves lower, then maybe I would play a second contract down here at the actual support range that would bring down my overall average cost. And at least I wouldn't be trapped with 2 contracts here, and then the price moves down there. I enjoy Rocket Mortgage. I think it's going to do well in the context of a rate cutting cycle. The same thing could be said about SoFi, right? So SoFi now almost $19. So if we haven't played SoFi all the way back here when we were playing it aggressively on the channel, back here when we were playing it aggressively on the channel, it was on the top 5 options list, guys, for like 3 months, right? If, however, you didn't get a piece of that and now you maybe want to play SoFi, are we going to play it super close just because we have FOMO? No, we got to be waiting for a pullback. Keep it on your watch list, right? The weekly bulls are in full control of this one. We'll be looking for a weekly pullback. Weekly pullback into where? Well, probably this whole area of support that we just blasted through for a back test. Keep in mind, 16 down to $14. Same logic applies. If I could ever only do 2 contracts on SoFi because of the size of my account, if it pulls back, maybe I do 1 contract at 16 because I know that if it pulls back into here hard, it can go below 16. So maybe I do 1 at 16. Then if it keeps dropping, maybe I DCA with another short put contract at 14. If I get assigned here, maybe I do another one there, right? That's how we play these ones when they're not into support. Here, we could have pretty much gone for the 2 contracts right away. Here, we could have gone for the 2 contracts right away because it was a very obvious zone. But now that we're a lot higher, we know the pullback can pull back at 16 and maybe go a little bit more. At least you want to be spreading out your buying power into different levels. It's a way to DCA into a position if ever you get stuck at a top end of a support range and it goes deeper into that support range. Now, that's everything for the small accounts. For big accounts, I got a couple stocks for you guys. CRM. So CRM has definitely not benefited from the most recent stock rally. It's been doing a whole lot of nothing, but it's been consolidating above support. 263 down to 236. If CRM pulls back, you will also see me play this one with my big account. I would love to play this range. I want to get as deep as possible. 250 down to 240. The valuation on this one, especially at the 272 or lower range, is quite attractive, guys. CRM is not that expensive right now. It's a high quality company. We can clearly see it's a very big support zone. The 200 weekly EMA is down there at the low 240. So anything under 250, I would not mind playing on CRM. Lockheed Martin, same concept. We know that Trump's big, beautiful bill just passed. There's a lot of defense spending right there, and Lockheed Martin will probably be the beneficiary of a lot of that defense spending. Lockheed Martin, I like it for a few reasons. Support level, big support level, 461, 446. This green line right here, 200 weekly EMA. How many times has Lockheed Martin broken and closed below that area, guys? Not many. Usually when it comes down to the 200 weekly EMA, it's a good opportunity to play. And right below that, around the 440 mark, this yellow line is a 5-year trend line. This is what I like to call confluent. So Lockheed Martin, in the past month or two, every time it pulls back into this range, and we can't say it doesn't because it does all the time, you will find me play a strike as low as possible. Think below 450, 450, 440. I do not mind playing Lockheed Martin down there. And the last stock of the big account list is going to be Berkshire. Berkshire, guys, has now been down for almost 3 months in a row. Very uncharacteristic for Berkshire to pull down 3 months in a row. Where are we coming into, though? The 12-monthly EMA, which is usually a long-standing support momentum moving average for the stock. We have prior resistance, which is now also support. This is the tariff fear lows, and we have the 200 daily EMA as well. It's been out of favor, and whenever a stock as solid as Berkshire is out of favor, I want to play it as much as I can because eventually it will come back in favor, and when it starts rallying, well, I can't really play it anymore, right? That being said, down here in this region, 480 to 470 is a region that I would not mind playing Berkshire with my large account, because if I get assigned 100 shares of Berkshire for $48,000, at least I know that I'm in one of the most high quality companies on the entire planet. And with that, that wraps up all our 10 bonus plays and wraps up our entire video. So hopefully you guys are able to learn something from this. Hopefully you guys got inspired with a few trade ideas. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these every Sunday in preparation for the upcoming week. And as always, guys, if you have any questions, especially for momentum stocks and stuff like that, definitely leave them down below in the comments. We can still play stocks like Amazon and Apple and stuff like that, but we'll be playing them on pullbacks, guys. It's just a lot of these names, they've rallied, and I don't want you guys to chase things at a low VIX, right? Because the volatility is very low right now, which means you'll have to write very close to the price if you want to get the 0.5% rule. And I just do not think that it's a good idea for people to be chasing, especially if you're somewhat on the more inexperienced side of the wheel strategy. So I figured I should show you guys some of the momentum stocks just because a lot of people have been asking me about it. And I figured that was maybe some part of the education aspect that I wasn't covering so much on the channel. You guys have seen me play those momentum stocks. I don't really explain the strategy behind it. So now hopefully you guys get a better idea of how I play some of these momentum plays overall. So that's pretty much everything for today. And lastly, but not least, if you guys wanted to be part of a trading and investing community and trade this strategy with myself, but also trade it with almost 200 other members, obviously we do much more than this trading strategy. We do a lot of the wheel, but we also do a lot of other things such as call debit spreads, leap call contracts, swing trades with shares, put credit spreads, all different types of option strategies that I don't so much present on the channel, but you guys see me trade all the time. You'll get access to all my trades in real time. A lot of wheel strategy trades every single week, but also a lot of other trades too. Here's just a lot of the trades that we've made in the past couple of months. The green check marks are win, the red little circles are losses right there. I'm always very transparent with my wins and my losses. You get access to all of those trades. You also get access to our private morning live streams Monday through Friday, where I trade and stream live for 2 to 3 hours at the open. You guys can ask me all your questions on your stocks, your options, your long-term portfolios, and I'm always there to help. If you're not there, they are recorded. You can also ask me all your questions in our chat rooms throughout the day, and I'm very fast to answer. You get access to our education section of private videos where I go through all of the trading strategies that I employ on the channel. How to do debit spreads, how to do credit spreads, leaps, etc., technical analysis, fundamental analysis videos, long-term portfolio creation videos, how to grow accounts, whether you have a small, medium, large account. Every single educational piece of knowledge that I give to my private members is available to you as well. And you also get access to all my charts and all my watch lists. So the options watch list that I use to trade every single day. And you can just copy paste all my watch lists and all my charts. Whenever you see these support resistance levels, you can copy paste those. It takes 5 seconds. You just get my entire chart layout and all my watch lists. And that also comes with all the fundamental analysis that I've done on over 200 stocks that I do every single quarter as well. This is an added benefit to members. And don't take my word for it. If you want to see what other members are saying, just take a look at some of the reviews. We have over 26 reviews 5 stars overall. So you can take a look at some of what your peers are saying overall. And the link to the Discord service is down below in the video description. So hopefully I see you guys in there soon. And if not, I guess I'll see you right back here on the channel, guys. With that being said, have a very good week. Don't be too greedy. Do not chase the market too much, especially with the wheel strategy. Wait for the pullbacks, okay? And if you're not, I mean, if you're telling me, well, what do we do, right? I don't have any positions and the market's just running away, running away, running away. I've always been very clear on this, guys, right? The wheel is a portion of the account, but you should have built long-term or longer-term swing trade longs. And also, you guys should also have long-term portfolios as well. So nobody should be feeling left out of the rally at this stage. You guys should have long-term portfolios of buy and hold companies for your long-term futures, but you should have also benefited from the most recent declines in the past 2-3 months to have built out some very solid long directional trades on some of your favorite companies that you are now riding, right? So keep all of that in mind. I'll see you guys in tomorrow's market recap. That's it for me. Have a great rest of your Sunday evening and peace.